Okay, so welcome back to another session, guys. Okay, now we are going to start the backtesting session. This is going to be the day 9 of the backtesting session, and we are trying to be consistent as much as possible, right? And today I have started two playlists. The first playlist is going to be the pre-market analysis playlist, and the second playlist is the post-market analysis playlist. So I'm trying to predict the directions of the present market as well. So I'm going to do forward testing as well as the backward testing. Okay, and let's start with our back testing. Okay, I've learned a couple of things. Okay, let's see if I could somehow involve them in my trading. Okay. Yeah, this session was supposed to be at 9:30 p.m. but at 9:30 p.m. I have to, before that I have to do a lecture. So that lecture, I want that lecture to be of less energy and this lecture of more energy. That's why I'm taking it earlier. Got it? Now let's go on to this time frame, load layout 2022 GPUSD done. Okay, here we are. The market broke down. Okay, let's see. So we have the market over here, right? Now we have these tools. Let's go on to the 1 day time frame. Go with the first daily analysis should be there, right? And I think the markets are now approaching this particular low. This particular low can be targeted, okay? And somehow this we can end up targeting this low because this low was not taken. So somehow the market went up, and then you know this particular movement, this whole upside movement is really really unpredictable. Okay, until as the market got at that point, okay, and went down, then we can see that okay, this particular buy side liquidity is going to be taken. Some of this got predictable, but in these days, can you see up down up down up down? It was too much of, what do you call it, okay, so it was too much of gyration, and in this gyration it is very hard to predict the market. That is why our trading is also fixed at the point. Somehow we lose, somehow we gain. Some point we lose, some point we gain. So this is how it's going, right? But if the market runs with the momentum, we can get a good profit or maybe a good loss. Okay, loss is not always good, sometimes it's good. Okay, now I am anticipating for this to be low, to be taken, right? This is a very clear draw on sell side liquidity, right? And let me go on if there is some person. Okay, now, so drawn liquidity is on sell side, so I want the market to go down, and this is the fair value gap which I want the market to get back into. Okay, so here it is. I'll delete this thing, right? And let me delete this yellow thing because it's of no use, right? And what can I do, what can I do? So here we guys can see this is the point, right? This is the fair value gap. It's a daily time fair value gap. Okay, so daily fair value gap, the price can come back into that fair value gap. Okay, and what I do with this color, let me just erase it out. So this is the daily time frame fair value gap. Okay, and I don't know, these are some dots. I how to delete it. Let me just see if I could delete it. Okay, yes, I can delete it. These were some dots when I was using my iPad to actually draw these things, then I got it. Okay, now clearly the draw liquidity is on the sell side. Okay, let's see what is going to happen in the 4 hour time frame. So 4 hour time frame. Now here we are. Here we have this thing. Okay, so this is the market where the market touched, but it didn't take out this particular point. Okay, well, if we want the market to clearly just go down, keep going down, then obviously we don't want the market to invert any kind of fair value gap. That is what I actually believe. Okay, now with the backtesting session we will see what is actually true or not. Now sell side liquidity is taken, right? The time is right now is 11:30. Okay, what is the time right now? It's 11:30, Wednesday, 1 March. Okay, so January, February, the data is done. We are going on March. Our minimum loss is going to be 0.25%. If we don't keep a loss of 0.25%, then there's no point we are going to gain something. There's no point we are going to lose something. I gotta gain something, or either I gotta lose something. Okay, either way, I need to learn something. Got it? Now, okay, here we have this thing. Okay, what should I do? It's on Monday, right? Wednesday. Okay, it's Wednesday. So the market went up on Wednesday. Sorry, Monday. Then again went up on Tuesday, I guess, right? And then it started gyrating downwards. So this was the whole weekly price swing that needed to be done. So can we go below this low? Think about this point, because this is our target thing. This is where the price wants to reach. Okay, let's go on 1 hour time frame. Again, I have the same scenario. Okay, now the buy side liquidities are there as well. See, this is a buy side point, this is the buy side point. Okay, so buy side liquidities are there. Okay, let's see if they are willing to take this buy side liquidity or not. Okay, so this sell side liquidity is taken, so I will now delete this red line and I'll draw a white line across it. Okay, so because now it's not the point where we want to look at. Okay, what is this point? Okay, this is the fair value gap. Is it necessary? Okay, so it was done and then again it got inverted and again got inverted. I feel is that fair value gap important? Okay, let it be like that. Okay, and this fair value gap, what is this fair value gap? Why is it there? This fair value gap is unnecessary, or is it necessary? See, mm, oh, let's just delete this point. Okay, this unnecessary. See, that are the points we are marking. Okay, we have some lot of buy side liquidities which are resting over these points. Okay, here also buy side liquidity, buy side liquidity. So buy side liquidity is there. If the market touches this point, it should come back to that point to take out the buy side liquidity. Then it can go down. So it will have more orders than usual. Okay, so here we are back to this point. Is the price going to reach the fair value gap or not? See, we missed this move. That is going to be constant 1630. It means it's 430, 530. The New York market will start. But let's see what is going to happen in that New York market. We'll go on 15-minute time frame. Okay, the fair value gap has been created. See, this is the up close candles. These were like up close candles. Okay, and here's the movement downwards, right? After touching a fair value gap, then we can somehow expect the market to actually come back to this point. I don't know, should I take this high or this, sorry, this starting of the candle or this starting of the candle for CIST, change in structure of delivery. Okay, so suppose if I take this point, then it should do something like this and go back to this point. Okay, somewhere like this. Okay, let's see what is going to happen. So let me just start this. By the way, let's just go on 5-minute time frame. One thing I forgot to tell you in this particular scenario is that, okay, see, these sell side liquidities have been taken. It means if the sell side liquidities have been taken, right, and on 7 p.m. there is one news. If the sell side liquidities are not taken yet, so it means if the market is going down, going down, going down, then on the news it is going to go up. Okay, that is what is actually happening. So before the news starts, the markets goes on the opposite side. Okay, now let's see what will happen. Okay, we'll see at the end of the session. Okay, so here's the session going on. Let it go. This is the fair value gap that has been created. It's a nice fair value gap. We can expect the market to come back to this point. Okay, or if it doesn't come, we do have got no chance to be there. Okay, what's the time right now? It's 18:35. It means it's 6:35. 6:35 just has been 1 hour. Okay, sometimes the movement happens in the London session and sometimes in the New York session. I wanted to go back to that fair value gap. Good, keep going. See, we want the price to somewhere reach to this 12:30. Okay, so yeah, and 12:30. Okay, here we have the second one is 12:30, right? This is the point we want the market to be reaching. Okay, we'll see what happens. Does the price reach at this particular level or not? Okay, and this will be the point where it should switch back to this low point. Okay, so if this particular thing comes back to this point, like somewhere like this, and then takes out this thing, change of structure, and then we can expect it to go down. Okay, that's what can happen. Okay, let's go on. See, this is right around 12 a.m., right, in Indian market. I won't be wake up at that point to take a trade, and obviously the movement doesn't happen that much at that time. Okay. Okay. Okay, before 12:30, I wanna see what's the movement before 12:30. Okay, right. So here's the 12:30. Two highs have been created. Okay. Now we can see. Hmm, two highs have been created. The market is gyrating downwards. Now what we can expect? Obviously the market is going to take out these lows. Let's go on this 15 minute. Let's go on 15-minute time frame. So down, upward swing, equilibrium, down, upward swing, equilibrium, again back to this point. Okay. Now here we are. Just a second, guys. Just give me a second. Hello, mic check. I hope I'm audible now. Let's go on to this thing. Okay. Now, at least if the market has gone down before the market has started, we expect the market to come back to that point to take out this low. Okay, so at least it should come back to that point at least to go back again. Let's see what happens. Okay. Okay, now go on 1 minute time frame. This is a 15-minute time frame, so I'm doing this 3 minute. Hmm. Okay, what can we do now? Okay, we can expect the market to go lower. It's time right now. Okay, 12:45. This has rallied upwards, right? Mm, so it took out first these highs, then it took out these lows. Okay, first it went down to take out these lows and highs, and it should come back. Let's see, is there any trade we can take on? So we have this risk amount as okay $26. So we'll paste the trade. Let's keep the loss as it is. Okay. Okay. The trade didn't pan out in our direction. Okay. So it took out this low, but it somehow didn't take out this low. What's the time right now? It's 6 okay, 6 p.m. First on 5:30, the market started rallying downwards. Then it jumped upwards. Okay. Okay, there's a high time frame fair value gap. We could have got into that fair value gap. Okay, so high time frame fair value gap. This is the point the market should reject it. Okay. 30 minute. 30 minute how it looks like. Okay, this is how it looks like in 30 minutes. Right, fair value gap. Right. Mm, it is wanting the price to go lower, one and two. Equal lows are there. Definitely the market will take out this thing. But is it going to take out now or at some other time point of time? We have to detect it. Okay, 30 minutes is there. 3 minutes. I think we waited for too long, I guess, right? 3:15 the market has like ended. The London session ended. Okay, so we could have taken out our trade. Should we have taken out our trade? Okay, so here's a rejection point. At least this should be the change in structure. We could have taken in trade here or not. Let me see on a smaller time frame. Okay, so 5 minute, here we are. So here's this thing, change in structure of delivery. Okay, so this is what CIST, change in the structure of delivery. We can expect the market to actually uh, respect this high. Okay, now we'll open some okay, one thing on here. Okay, and the another target as this point. Okay, let's open a position. Market current balance 25, place trade. Let's save the session as well. So it didn't take out that point. It is generating the liquidity. Holding on to this trade would be okay or not? Let me just do it like this. So it is taking out buy side stops, right? So this time it should take out this thing. Okay, it has been midnight for this trade. Okay, but I'll let it pan out because if it's midnight I must have slept. Okay, fine. Trade taken. Okay, in this particular scenario the trade was not taken because there's a higher time frame fair value gap that was there. We should have kept that in mind that okay, the bigger time frame fair value, if we are expecting the market to come back to that point. Okay, yes, it did took a rejection. Okay, but if we are taking a smaller time frame fair value gap, then the target should not be according to the bigger time frame fair value gap. Okay, this is the bigger time frame fair value gap, and this target I expect this on this is what 1240. I achieved this particular target. Okay, so the market went down, it again came back up. Okay, see, whatever is your stop loss, do not move it. Okay, if you keep moving the stop loss, you are not going to get the trade. All of these things are I'm telling it to myself. Okay, and if somebody else is watching it, it's good to go, but yeah, this is for my teaching. Okay, I'm telling this for myself. Okay, now we can expect a rally downwards, right? So yeah, on this point of time around I'll say 12:40 my trade got taken. Fine, I won't be wake up to put any other trade. So it's the time right now is Friday. Friday the market is going to end, so I'll not be expecting it to do anything rather than just keep going. Okay, what's the time right now by the way? It's Friday. Wait. Friday. What? Friday? Friday. Oh, sorry. We did this trade on Thursday, and that is the reason I was thinking Friday. How it is giving such a nice scenario? It was Thursday, okay. Now after 12 a.m., it's now Friday, okay. And generally on Friday, I don't think we are getting any kind of trades on, okay. We don't have the analytics, but somehow with our knowledge, we can see that okay, we don't have any trades on the Friday. Okay, got it. Now we have this fair value gap. Let's see what is our draw on liquidity on the other time frame. But I would want this particular week to be ending. That is the reason. Okay. It's been 20 minutes. It's fine, right? Now I have the habit of speaking too much. I'll just stop the time for a moment, or should I just keep going? What do you think? Okay, let's track this thing to 12:40 again. 12:30, I guess. 12:30. Okay. So one moment at 12:30, one moment at 5:30. These times are according to 12:30 p.m., 5:30 p.m. These times are according to New York Standard, no, Indian Standard Time. Okay, you have to convert it into New York Standard Time. So 12:30 to 3:30, the movement will be there. 5:30 to 9:30, the movement will be there according to Indian Standard Time. Okay, so we should just keep going on, keep refining the what we want to do. Okay. Okay, this got taken. Change in the state of the delivery was at this point. Okay, this was the change in the state of delivery. Price again came back, again started, again took this thing. Okay, then it went back lower. Okay, fine. We are what? We are 522. It's okay. It's okay. 522 is fine, right? I will take 25. See, if we are up 5%, we can actually at least we can expect a 0.25% increase in our uh, risk. Okay, see if we remain, if we go above $800, I'll start taking a risk of 0.5%. Okay, right? Let's go on, guys. Let the market go at that point. So it's right now it's 2:30. Obviously I won't be wake up for this time. 3, let the market do what it wants to till it reaches the green line. At 12:30 I'll form what my mind is saying. Okay, initial faculty feedback. Okay, now is there anything that I could discuss? See, this is the Friday's trading. I I generally don't find anything good in this scenario that I could expect. Okay, this is definitely this is going to work out. Okay, but I could see one thing that okay, this is the point. Okay, this is a fair value gap. I hope you guys can see this. This has been touched. If the price comes back to that fair value gap, I can anticipate an entry on the downside direction. Got it? Okay, that's what I could expect. Let's go on 3 minute. I should go on like 1 hour, right? Let's go on one day. Okay, let me save this up. Good. So the price is back to this point. It has taken. It has just touched this low. Okay. See, remember this thing. It has just touched this point. Okay. And now because it's Friday, mostly it will do an opposite movement, and which I feel okay. It can do an opposite movement. Okay. Because we have been swinging lower. At least there should be a run up in the price. Okay. And I think if I was a market maker, if somehow I was a market maker, I would not be letting the market to go back to that low on the Friday itself, right? But we have to keep in mind about both the scenarios that can happen. Okay, maybe this, maybe that. We have to keep everything in mind. Okay, so here we have this thing. Okay, we can see this particular level. Okay, you guys can see this is the level where the 0.5 equilibrium is coming. Okay, let me just extend it. So this is the point of the 0.5 equilibrium. Wait. This is the point, right? And this is exactly meeting with this low. Wait, let me just match this level. Okay, now here the low is exactly matched. If I try to match this, see, this particular candle has not been created yet, so I can't anticipate that okay, the market is going to store like jump back from that point. Let me just try to extend the market such that the 0.5 collides with this thing. This is the point. Okay, so now the 0.5 is colliding with this thing. The market could go back till that point, then we could somehow anticipate some kind of this point. What is this? Okay, let me just go on to the smaller time frames. Here we are on a smaller time frame. Okay, and okay, so 0.1 to we can anticipate somewhere. Let's make it more correct. Somewhere at this point, and we can anticipate somewhere at this. Okay, now we can see a fair value gap which has been touched. Okay, a fair value gap which has been touched. So it's on 1 hour time frame. I'll just try to see if we could go just more detailed. Okay, I'll draw a fair value gap right over here. On 4 hour time frame, this fair value gap has been touched. So the chances are that the price can come back, break all those particular highs, okay, to take out buy side liquidities. Then on the next week it could then come down, rally downwards. Okay, that is what we could anticipate. Now, okay guys, let's go. Let's see what is going to happen. And let me just delete this thing. Okay, I'll expect the market to keep at that low. Okay, this is the low that we are targeting. I'll just draw something over here to mark up that low. I don't know, whatever it is, I'm just trying to explain it. I don't know why am I drawing this price swing. I need to go on, I think, lower time frame to actually know what is going to happen. What am I actually doing? Okay, this is the lower time frame. Fair value gap, maybe. Let it be. Right. On if I go on a 1 hour time frame, this is not a good. Okay. Rallied price rallied upwards. Okay, wait. This fair value gap is actually good or not? Let me just see. The price could come back to that point or not. I should just extend it so there is just more room for exactly understanding what is going to happen. Okay, and I'm matching this low somehow with that low, so 0.5% equilibrium, this low and that low is there, so the change of delivery pattern can come back to that point. Okay, and could anticipate. I'm not trying to farm any kind of buy sell liquidity, sell sell liquidity entry kind of thing. Okay, I'm just trying to see what the market is showing me. Okay, so one thing is that it can dip in this particular scenario, it can do a dip and then go back higher. Okay, that is what we could anticipate. Okay, now let's go on. Okay, now this is the point we expect the market to go higher. Fair value gap, fair value gap. If somehow one fair value gap gets inverted, that is a moment I anticipate that the market is gonna go in the opposite direction. Okay guys, that's what I expect. Okay, so it can rally somewhere down. Okay, one thing could also happen, right? It can take out some low and then go back to that point in the next week. The next week could be bullish, right? Okay, so the most nearest sell side liquidity is this point. Okay, we take out this point, then we could go back higher if we want to. Okay, but I want to see some kind of confirmation, right? So let me just go on a smaller time frame, 15 minutes of the confirmation. Okay, 15 minutes of the time frame. This fair value gap has been touched. It could come back to that point again. Okay, so it has been bouncing off from this point, right? After it took this low, again rally backward, back to equilibrium. See, up, back to equilibrium, up, back to equilibrium. Then took out this particular recent low. Then it started rallying upwards before the market started, somewhere around after 10:30 or somewhere when it opened, the market started rallying upwards. It means it is trying to go back to that this particular low. Okay, so let me mark this low which I am targeting. Okay, and by the way, save this up for you. Now this red line, sorry. Okay, let me just draw another red line for you. So now this is not the point where you want the market to go. Wait. So this is what I want to delete now. Now the recent time swing which we want to let happen is, so this was the long term low, this is the recent low that has been created, which is a sweep. A sweep should not persist. Okay, right? And let's see what we could do. At least we want the price to come back to this fair value gap to actually form any kind of entry. Actually, I think we're missing. I don't think so. Engine structure. Okay, let's see. But if the market somehow comes to this point, I'll see what we could do. Right? Is any kind of trend line breakage? Okay, See, for the retail traders, I'll tell you what they are thinking. This is some kind of trend which is being followed. Okay, they will think that it is going to broke. Okay, this thing is going to be broken, right? It means now the price will be going upwards, but now this is where the price is going to swing downwards till this point. Okay, somehow this is going to be happening, right? I don't know in this session or maybe in the next week, but definitely it is going to happen, right? Because this is what the retailers are going to think. Oh, damn. Oh, well, it didn't take out that low. Maybe it can do it in the London session as well. Wait. Is there any fair value gap in here? Is there any fair value gap? Like imbalance or equilibrium? Is there equilibrium or not? Okay. Hmm. If the movement is out, if the movement is out, I can't do it. I can't help you with anything. Okay. It's out. That's it. I can't see any confirmation to trade back to that point. So let it be. The movement is gone. The movement is gone. That's it. We can't do anything else, right? Okay. 31 minutes. Just a second, guys. Just a second. Mic check. I hope I'm audible again. See, what I was expecting that the market is going to, just sweep away from it, making the retailers think that the market has done a breakout. Now that the price is going to go up. This is what it exactly did, breakout. Then it again went lower. Then it showed a market that now it is going to rally because what the retailers see, it's a breakout, and then it's a retest. Then it will just keep going. Okay, what I anticipated, at least it should go back to that fair value gap to give me some kind of confirmation, but anyways, we don't expect anything. What we could have done is like, okay, this is the point you guys can see. This is the point. Okay, the rally upwards came back down. When it touched that point, okay, this is the point. See this thing. This is what this is. This is. It's not working. Can I save button now? Oh, I can't save it now. It means I should reload it and I will lose some of my drawings. Very good. Average view duration is 32 minutes. Okay, nobody's watching it. So if somebody watches it, it will just go down. Okay, here we are, right? And we'll learn with the price. We are right now with this backtest. We are learning. We're trying to learn what could be the movement. Okay, and let's go on. Okay, it's gonna take out this low. It's gonna take out this low. I can't help it with anything. Okay, fine. What's the time right now? It's 15:15. I don't have any other moments to finally predict onwards. Don't think so. Okay, let me just have the data here. Okay, finally data has been reloaded. Literally no price movement in this particular thing. Okay, so you can see such a high price sweep. The price just falls back down. It again went there, then on somewhere on Tuesday it started rallying upwards. Okay, so down, close, and then it covered this particular big gap, then it again rallied up. So there's no kind of support I could form. We could somehow anticipate, this particular some kind of gyration would be there. I can't really expect anything. Okay, the price has been moving so low. I want the bottom to be created and a equilibrium point to be reached. So if we start, okay, somewhere from this point to this point, the equilibrium should start. I can't form any kind of entry, but let it be. This is a fair value gap. Okay, let's see what is going to happen. So bigger time fair value gap, price went down. Let's see what is going to happen. Definitely it is going to be taken, right? Now if the price is swinging upwards, we want the price to be swinging upwards with the 50% of the equilibrium point, which is at this point. The price should come back to that point. Okay, but I'm not going to take a trade. It's Friday and I have less confirmations, right? If the price comes back to this point, we can imagine this is the fair value gap. You guys can see fair value gap. It got ran through. Okay, so now one of the fair value gap has been ran through. It means now the price will come back to that point. Okay, somewhere near this thing, near this I guess near this thing. Okay, right. If it come back to that point, it is a change in the structure of the delivery, right? And let it come back. Oh, it was way too fast. Finally it came through. It was the time right now, by the way. It's 21:45. 21:45. It's 10 a.m. Can I expect a movement? If I expect a movement, then what could happen? This is the high, and this is one of the highs, right? And these highs can be taken somehow. Okay, let's take a very small entry, right? Uh, see what is to see like what will happen. Okay, I don't encourage trades on this day, but fine, you have to go with that. Okay, I'll put this as the stop loss, this as the target. Fine or not? Let's see in 5 minutes how it is going to look like. Hmm. So this is down close candle, right? This somewhere at this point, this is the change in the structure of delivery, right? Hmm. Come on, let it be. It's 10 p.m. I already won on Friday. Why should I be taking the trades again? Hmm. Okay, let's just observe the price. This is the moment we should only observe the price to see what is going to happen. But something is going to be taken or not. See, the sell side levels are taken. The market has rallied what? On Wednesday. See. Let me just have the moment, okay? Go on 1 hour time frame to see what is actually happened in this week. So this is Wednesday. So this is Tuesday. This is Monday. Monday price went up. Tuesday again it went up. Thursday it went down. And on Friday close it should like go above this point, okay? It should go over this point. Yeah, somewhere. Yeah, now it is good. Now all of these three lines are combining with each other. Now on Friday at least I want an opposite rally. So although I don't encourage catching that opposite window rule. Now what should I do? What should I do? One of the fair value gap you guys can see that has been inverted. So the price could come back to that point. Let's just take a trade, okay? Let's just not wonder too much. It will give us some knowledge and some. Mm, this is the point. We could take a trade, put the stop loss here, right? Yeah, we could put the stop loss here. Like here. If I take an entry, if I put the stop loss here, then okay. Okay, this is a swing. If I'm gonna take it, put it, let's let it be. Now here's the point. This is the target. This is the top loss. Okay. Open position, market. I'm gonna sell. No, I'm gonna buy. Current balance. I wanna do a. I don't wanna gain the like. I don't wanna take my loss. Okay. This is just a test trade. That's why. So current balance. I'll just say point what point. 1.5 is enough, right? Because last time if I gained $60, I should not lose 1/4 of it. Okay, let's see what is going to happen. La 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 la. Oh, the price went till this point. I should have taken the trade at that point, but now it's not taken. What's the time right now? It's 12 a.m. I would be slept, so I can't do anything. I would totally depend on. Ah. So on Fridays, it is going to do a. Just a second, guys. I need to reply somebody. Okay. And okay, so it got taken. So the opposite movement thing on the Friday session is something which we should believe on, and it works. It worked for the first time. We'll anticipate more and more and more data to see what is going to happen. Now we are $571. Okay, $50 again. I've got profit. Nice, nice, nice. Okay, fine. So we on this particular date we are up somewhere around. Good. We are nicely up. One time. So guys, the price just showed a breakup. So let's just wait. Now the price has ended. We have got to be waiting till the Monday 12:30 p.m. to see what will be happening in the next session. Okay. Now where's that? Yeah, here it is. Monday 12:30. Obviously, I will be taking no actions till that point. Okay. Now 12:30. This particular thing. I swap to the next day. 5:30. Yeah, I always forget this that this is the London session start. This is the New York session start. Okay. Now let's wait for the another day, 12:30 p.m. 5 minute. Go back, guys. Just start doing its variations. Before the market wants to go higher, it will go for lower, right? Yeah. We at least want the price to reach back to that equilibrium point. So it has created a nice swing downwards. Where can I anticipate the entry to form? Not a 5 minute time frame. Let's go on 1 hour time frame to see where the moment actually started. Okay. So where could we expect the moment to be starting? Okay. At least this point to this point, right? Now this is the moment. Okay. It just got down a little bit more, right? So at least you guys can see this is the fair value gap which has been touched. If that fair value gap gets touched, it means what? The price is definitely going to come back to that point. Okay. Now, because this fair value gap got inverted, the chances are high that the fair value gap is going to now act as a some kind of question which can lead the price up higher. Okay, now go on a 15 minute of the time frame. Okay, what's the time right now? How many sessions? Okay, 42 minutes I have done. I think this week I'll be able to do in 80 next 80 minutes. I'll do this week's back testing. Okay, and then we can see what will happen. Okay, yeah, so here we are. Let's go on 1 minute time frame and then just keep going, keep going, keep going. So the market has let it touch that point. Okay, okay, so the market has been touching this fair value gap, right? It is just this fair value gap. I'll anticipate for an entry which, see, the market did lower, it took out sell stops, buy stops, and then it again went down. I think the price wants to go down. But wait, is that equilibrium? Let me just see if we have really checked on a right or a uh, good pricing. Have we checked the right pricing or not? We check out from this point to this point. What is the price swing? This point to this point. Okay, from this point to this point, that is nice. Okay, the price swing is from 0.5 it has taken. It can go back down. Okay, but on Monday there is always some kind of wrong movement. Even if I want it to go down, where can I expect it till to go down? Okay, see, the movement start from this point, remain till this point. Now from this fair value gap we're getting confirmation that the price should reverse, and from this 0.5 it has reached the equilibrium. Now it can swing back again to see what is happening. Let's see, I want a swing back. Okay, I want a fair value gap to be inverted in this thing. Okay, there's a fair value gap. We guys want it to be inverted. Let's see what is going to happen. No, 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 no. Is it going to do? Hmm. There can be change in the structure of delivery, right? A plus a fair value gap. But even if I anticipate a low to be taken, where can I expect it? Where can I expect a low to be taken? See, the market structure broke. This is the buy side of the market. This is the buy side curve of the market maker buy model, and this will become the sell side curve of the market maker buy model. So there is a breakdown, fair value gap, right? We can anticipate an entry. Plus, I hope you guys can see this is the point where the change in the structure of delivery has happened, right? Okay, so here's the change in the structure of delivery. I'll put my orders in here, and then I'll see if you could just enter. So here we have, okay. Oh, wait, not this point. Okay, this didn't take at. Okay, next time, because it didn't touch that point. Okay, I want this particular thing to be touched. Okay, once this thing gets touched, this is the where I consider change in the structure of the delivery. Okay, if the price comes back to, okay, so the price comes back to that point, then I can anticipate an entry, right? Let's see what is going to happen. If I take a loss or if I take a profit, I don't care. Okay, is the profit, and there's a fair value gap which has been touched. Okay, the price got inverted. Nice. You guys can see there's a fair value gap as well. I'll try to keep my stop loss at this point. Okay, yeah. So here's the entry. Here's the stop loss. Now these are two equal highs. So one of the highs being taken with the other high. This could have been an SMT, but I can't, check Euro USD pair, because right now obviously I can't check the SMT because the traders casa doesn't allow this. Okay, in the two trades. Now let's see, where could I anticipate my low to be taken. This one of the clearest low I could see is this point. Okay, that's it. That's where I want the price to swing back. That's it. I don't want a long price swing at till this point. Let's see if you could take out or not. Okay, but at least this is the moment that it should take out. Okay, so I'll be opening a position, I'll do a sell, I'll do a market trade, and I'll do current balance. So I'm more convicted on this point. So yeah, we could take a loss of $20 with the start of the market. This is not the exact date where I want the market to give me some kind of good moments. Okay, hello sir, Raghav Venkatesh. Hello Raghav. Okay. Hello Raghav Venkatesh. Oh, you are the one I made you subscribe the channel. Got it. Now current balance, its risk is 20.2%, that is 20%, 0.2%. Okay, I'm taking a risk. Sell is there, market is there, then place trade. I'm gonna place the trade. Okay, right. I hope two entries are not there. Okay, just single entry should be there. Let me just let the price go on. What it's trying to do, man. Whatever it is trying to do, it will just do it. Okay. If the price wants to take out your stop, it will take out your stop. If the price wants to take out your target, it will take out the target. Was there any low at the side? No. I could somehow expect the market to give me any movement. Okay. Fine. Done. So now we are $797 up. Okay. It's fine. We are somewhere over 8%. Once we go over 8%, the minimums, the minimum, the optimal minimum. Okay. Not minimum, optimal minimum. Okay. Because some trades are very confirmative, some are A plus setups, some are not A plus setups, right? So there's a confusion between them. It was a 3.45 ratio. It means somehow again 20 into 3.45, that's somewhere around $75 of profit, right? Because somehow I expect the market to. So now on the Monday session, the market is going downward. Maybe that the market wants to go higher. This could happen, right? Okay, yes or no? So right, these things can happen. We have to actually go with both of the scenarios. It's not just single scenario that is going to happen. Take the bullish sentiment as well, take the bearish sentiment as well. But if you are not able to find any bullish or bearish sentiment, okay, see, the reason I'm not expecting the price to take out this low is, somehow it's way too away, and this low has already taken some low, and this is not an equal low. Okay, so this low is just hanging in some kind of air. So confirmation to that price to go to that point is very low. Got it? Okay, now you guys can see on this on after the 5:30 p.m. the market rallied upwards, okay, to do a manipulation, then it came back down. So when it gave us our profit, it was around 22:10. It means 10:40. We put the trade on somewhere around, so it took around like 10 hours, 11 hours, or somewhat 12 maximum 12 hours it takes us for the trade to be taken. Now let's move these lines to the next day, 12:30 p.m. Okay, let's see what it's trying to do. Obviously I want to be wake up, so I'll just fasten up the price. Don't want to see what is going to happen or not. I'm trying to trade in the scenarios which I will be working on. Okay, so make sure you guys do it too. You should only trade into the scenario which you are actually going to work for. Got it? Okay. By the way, you have got 10 minutes. I hope we could do this particular week. Monday is done. I guess let me just go on fast forward the price and see what will happen. Every day at 12:30, 5:30, I'll do some kind of variations. Okay. Uh, I'm getting faster results in this point, but obviously I have to be more patient. Okay. Now the price rallied downwards. Okay, so one fair gap up into that failure gap, one failure gap up into that failure gap. The price is rallied downwards, right? So this is the low, this is the low that has been taken. Is this particular low going to be taken or not? This is less confirmative. Okay, now I have to see whether I want the price to go back higher. This particular failure gap got inverted, again got inverted, come back to that point, took a, you can say this is the CISD. Okay, the change in the structure of delivery, it exactly happened. That's what I anticipated. Okay, so broke down failure gap, again just got back entered. Okay, here we could have done a low risk entry, but I can't see any kind of failure gap in here, so obviously that low risk entry could have taken us out of the trade. Okay, 7 p.m. there is going to be one session. Okay, one live session. 6 minutes are only left for our live to be of 1 hour. But anyways, I'll try to do some Tuesday session as well. Let's see if we could understand something from this point or not. Before that, let's just save this thing. GBP USD saved. Before the market started, the market has been rallying downwards. Okay, so around 10 or 10:30 after market open, it rallied downwards. It is telling the people that it wants to go down. Okay, it took out this low, right? This low has been taken out, and then after that low got taken out and the price came back to that point. Okay, now after that point, okay, this is 10 minute nobody uses. Let's go on 15 minute, right? 15 minute you guys can see. Okay, there's a fair value gap, right? We wait for the market to invert to this fair value gap. Okay, this fair value gap should be inverted, right? If this gets inverted, then we can anticipate any entry. Yeah, now here we are. Okay, so let us see what is going to happen. So yeah, 1 minute time frame. La 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 la. Okay. Okay, guys, what do you wanna do? So see, this is the entry in the fair value gap according to fair value gap technique, and also there's an entry according to this particular change in structure of delivery point. This low has been taken out. Now let's see what could happen. For the market to go higher or the market to go lower, it is not trying to invert any kind of fair value gap. It is respecting fair value gaps. Okay, it touches the fair value gap, goes back to the external liquidity. Touches the fair value gap, goes back to external liquidity. Okay, once it inverts the fair value gap, then I will be looking for some kind of interest. Okay, China has a we need a test plan for the minute. Okay, 5:30 the market has started, and before the market started the price has been rallying downwards. Okay, let's see the price broke down, right? Look at all these things, and now here the price exactly broke down. So this is actual change in the market structure delivery. Okay, and it came back again to the change in the structure of the delivery. I think this week is going to be bullish or bearish. Why should I be thinking like that? I should not force my thoughts into it. Okay, and I really don't know where the market should go because there's a lot of room to just travel in this point. Okay, we have got less points where the market is should be drawing. Okay, now let's see what we have in here. Okay, by the way, let's just have a look on what the Euro USD is trying to do. Okay, so the market has been going lower before the entry has been done. Okay, so what we can do, we can just anticipate. It's what 6:50 p.m. right? You go on the forexfactory.com. Okay, so on 7 p.m. you guys can see Indian Standard Time, USD retail sales are going to come. Okay, and according to that the market will move. Okay, we'll see because most of the people would have put their stop loss. The market is like, if the market wants to go higher, see the buy stops have not been taken. If the buy stops have not been taken, then let it be. Now what might happen is that this particular thing is gonna go upwards, right? We'll put a buy stop if the market is enough here. We'll put a buy stop here, the stop loss near to this point high. Okay, then we can anticipate a entry over higher or this point. Okay, and somewhere over this thing, right? Okay, but somehow the calculation is that obviously the price is going to go lower. We want the price to go back high to this point, then go back lower. Okay, this should happen. So we have two ways of trading. Like either we could go this is the news comes positive and then we can go back down, and then we can anticipate an entry here like this CISD change in the structure of delivery, and then we can go back to this sell stops and take out this thing. Okay, this kind type of entry could be formed and some other type of entry could be formed as well, but it's Thursday right now and lesser chance becomes on Thursday. Wednesday I have the best trading. Okay, so I believe on the Wednesday trading as well. Okay. And let me just see what type of movement it's going to do on Tuesday, and then we can have a wrap up our session. Okay, let's see. La 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 la. I wanna see some kind of change in the market structure, right? It is trying to go higher. It is trying to consult there. Okay, it's going lower, lower. If I can't predict any entry, I'll not try to do it. Okay. I want the fair value gaps to be respected, and it is really respecting that fair value gap. I hope you guys can see, right? There is a fair value gap that is getting respected. Okay, so here the market structure shift has happened, right? So I should anticipate an entry. Wait, what's the time right now? It's 23:30. Obviously, none of the entry I'm going to do at that night time. Okay. Okay. By the way, you guys can see there is a change in the structure of delivery over at this point. Yep. Let's see the market will rally or not. Whether it's Asian session, obviously, yeah, after 2:30 Indian Standard Time, the Asian session will end. So yeah, we can expect that. Okay. Anyways, you could save and just let this session end. Okay. Now, what is the point of this discussion? You guys can see we were so stuck at that price action. Okay, we are really 5 upwards. Okay, we're taking. By the way, we are not following money management. That is the wrong thing. I won, I should be taking higher rate. I won again, I should be taking higher rate. I won again, I should be taking higher rate, right? So see, I was following the money management when I was losing, but I should also follow the money management when I am actually winning. Okay, but you guys can see we went up from 484 something to actually around. I can exit the session, right? I have did save and everything. Okay, so I can exit the session. So exit session. Okay, no sessions available. Here, yes. So 797. Okay, let's go to the analytics, and it will not show the great analytics. Okay, so now the winning percentage has been improved because the more and more we are going to know about our strategies, the more we are going to follow it. Okay, so net PNL is $800 and the win percentage is 36%. I'll try my best to actually improve this win percentage because we have been getting a lot of losses. You guys can see these red color losses. All the losses are lesser. Okay, but you know we have been taking really wild trades, enormous risk rewards. Okay, so my average RR is 4.69. Okay, and my total trades is 55. Average RR is somewhere around 4.5. Trade duration 256 minutes. Win rate is 36%, and average profit loss is 0.15%. Okay, I guess that is it for today. Take care. See ya. Bye bye. Have a nice day, guys. Okay, and keep back testing. Don't back up.